Yeah, Wipro has come out with its numbers. The consolidated net profit has come in at 2,052 crore rupees versus 2,235 crore rupees on a quarter-on-quarter basis. RT Services rupee revenue has come in at 13,109 crore rupees. This is higher than what we were expecting. Our poll was about 12,940 crore rupees. We are expecting a growth of about 1.1%. So this is definitely higher than what we were expecting. We'll put up the other metrics for you. Rima, first cut, at least on the... Okay, the EBIT has also come out. It's 2,327 crore rupees versus our poll of 2,457.
Well, margins are significantly lower than expectations, and it's a big miss in the company's margins. At 2,327, you're getting EBIT margins of 17.75%, which means it's more than 100 basis points lower than consensus expectations. Compared to on a quarter-on-quarter basis, it's a fall of 230 basis points seen in terms of a decline in Wipro's margins. So the top line, rupee revenue growth, not a very important number to track, but it's a growth of 2.5%. That's in line with expectations, but it's not a key metric. Margins coming in at 17.75% is at least the lowest that we've seen in the last 3 years, if not more. I don't remember, Wipro dropping below 20% margin band, at least in the last 3 years. From FY14, FY15, FY16, the company's always managed to hold on to its EBIT margins above the 20% band, and now dropping below 18% is coming in as a big disappointment. Wipro had disappointed the street even in the prior quarter with respect to its margins, and Q1 margins are not looking good. So this is not a good number. And what you need to remember is next quarter, you're going to have a 2-month impact of a wage hike. Wipro gives its wages effective 1st of June, which means in the quarter that we're in, there is only a 1-month impact of wage hike. And this time, Wipro had given higher than normal wages to its employees in order to bring down the attrition. So this quarter only had a 1-month wage hike. Next quarter is going to have a 2-month impact of wage hike. And the many acquisitions that they've done are really hurting the margins. The margin dropping by 230 basis points is far more than what the street was anticipating. Street expectations was for a 1% decline in the margins. What we don't as of now have is the dollar revenue growth. I suspect it's not going to be a very good number going by the margin performance, because the biggest leverage to margin normally comes in from the top line. So I don't think that's going to be good. And the other key number that we're working with will be the Q2 guidance, and that's a number we don't have right now. So the only important number from what we have is not the rupee revenue, which is slightly better than street expectations. It's the margins which have come in as a big disappointment. And just from these two numbers that we have, it's not like a pretty picture. Remember, Wipro's done 4 acquisitions in the last 4 years, and most of these acquisitions are either to gain capability, improve their vertical presence, geography, etc. But these acquisitions come at a price. They are margin dilutive. In this quarter, the company had a 2-month integration of health plan acquisition. That would have contributed about 200 basis points to the company's top line. But if you very clearly remember, the management speak when they acquired health plan, they said that health plan acquisition will result in margins getting hit by 50 to 80 basis points in FY17, and that seems to have played out. A 1-month impact of wage hike, health plan acquisition being margin dilutive were the 2 key headwinds that we knew on the margins. But even then, I don't think the street was working with a 230 basis points quarter-on-quarter decline on the margins, and these are the lowest margins that we've seen in the last many quarters. As I said, margins have not dropped below the 20% band in the last 3 years at least. So Q1 margins have come in as a big miss.
Absolutely. In fact, the two other metrics that we need to watch out for is the dollar revenue growth and the kind of guidance that the company is giving. Given the fact that Q1 is a weak quarter, it's important to understand exactly what the outlook would be for the second quarter. We were expecting the guidance to come in between 1.5 to 3.5%, but you can't guess till the numbers are out, Rima. But would you reckon that now the Q2 guidance also could be sluggish, again, based on the kind of visibility that they have right now?
Well, it's hard to say. We don't have anything to, expect a good guidance or a weak guidance. We can only work with the numbers that we have. But in fact, we have Rahul Jain of Systematic Shares and Stocks who joins in. Rahul, margins at 17.75% for Wipro in Q1. Your initial reaction?
First, we need to see the segmental performance to make a very concrete view. But if you see, their margin has been coming off. One primarily reason of being operating metrics. If you see, their growth has been largely in terms of coming from the acquisitions. The operating growth has been quite minimalistic, and apart from that, if you see their margin in the other businesses, which is like the product segment, which is a non-IT services business, that is also impacting the profitability, but more in terms of the total EBIT margin and not the IT services. So they are getting impacted on all fronts from that perspective.
Rahul, have you been able to calculate the impact of currency and the exact impact of acquisition? Because I believe, as Rima was pointing out, health plan and the other acquisition would have obviously impacted margins, including the kind of currency volatility that they've been seeing.
No, we do not have that number as of now. But I think that acquisition-driven factors we would only come to know from an acquisition from a company call perspective. Otherwise, you could only take the total IT services and the non-IT services margin. Those details we would get probably from the management.
Okay. Rahul, what could have been the margin impact on account of the accounting standard change? Because, as we saw in the case of Mindtree, there would have been some margin impact because of now moving to IND AS, the Indian accounting standard. What would have been that impact?
As far as the result that has come so far, for Mindtree it was till EBITDA there was no impact of moving to IAS. Only the amortization charge is what they saw an impact of 110 bips in this particular quarter. So I think till EBITDA there is no problem as far as the adoption to IAS is concerned, because IAS is pretty similar to IFRS, which Wipro has been following. So you would not see much of a change because of that on a quarterly number.
Right, but at the EBIT level, there would have been an impact, right? Because of change in amortization and the way it's accounted. So if you could just tell us the number that you were expecting.
In terms of even from an EBIT perspective, the number that may get impacted is more from the amortization of any acquisition that would have come, which in case of Mindtree was a very high number. So that was the case. As far as our EBIT estimate is concerned, we were expecting an EBIT of 2483 crores for the quarter.
Okay, we also have Karan Dharani of Daulat Capital as well as Sarabji joining in. Karan, let me come to you first. Your initial reaction, we don't have the dollar figure as well as the guidance yet, but how would you react on the margins? Because margins are significantly lower than what we are expecting. Below 20, yes, but at 17.75%. Karan? Okay, I think Karan can't get our audio, but Sarabjit Kaur, Nagra of Angel Broking, is also with us on the phone line. Sarabjit, coming on the margins, as Rima was pointing out, this is significantly lower than what we were expecting. What would be the key impact of currency, of forex volatility, and of course of the acquisition that they had been making over the last couple of quarters in this quarter?
See, currently I've not gone into too much detail into to the numbers broadly, but I can see margin-wise, I think it is more or less in line with it's lesser.
One second,
we have the dollar revenue. Yeah,
it's coming at 1930, and this is actually better than what the street was anticipating. So 1930 beats our expectation. That means the company has delivered a dollar revenue growth of 2.5%, and this is slightly better than the 2.3% that the street was anticipating. At 2.5% top line growth, it's better than what Infosys had delivered. So if you now stack it up, on top would be TCS at 3.7%, then would be a Wipro at 2.5%, and an Infosys would then follow at 2.25%. So dollar revenue could take the sting out of the margin miss, and the dollar revenue growth at 1930 is up 2.55% on a quarter-on-quarter basis, and about
we have the guidance as well.
Okay, and that is not looking good, because at 1931, it means at the lower end, it's absolutely flat. So I think the guidance is going to go down as a big miss. So at the lower end of the guidance, it implies absolutely no growth. At the upper end, it's 1.03. So I think the Wipro's guidance at 1931 to 1950 is no growth at the lower end to 1% growth at the upper end. For one, this range is significantly narrower than the range that we've seen in the past. Typically, Wipro, when it comes out with a quarterly guidance, at least has a range of 2 percentage points, because at the end of the day, there is a lot of volatility. So for one, the guidance is very narrow, and the guidance is much lower than street expectations. While we have been saying the expectations have been all over, Nomura expectation was at 2.2 to 4%. Kotak was expecting 1.5 to 2.5%. UBS was expecting 1.5 to 3.5%. The only one close to Wipro's guidance was CLSA, which was expecting a guidance of 0 to 3%. But at 0 to 1%, guidance is not looking good, which means it's, and generally this guidance is much lower than the guidance the company has given out in the past for the second quarter. So just to refresh your memory, Q2 FY16 guidance was at 1.5 to 3.5%. Q2 FY15 guidance was at 1.7 to 4%, which basically means they were all in the range of 1.5 to 4%. This guidance is much lower, and it implies no growth on a quarter-on-quarter basis. In fact, let's get Karan Tarani in, from Dolat Capital. Karan, we've got a couple of numbers. One, Q1 dollar revenue growth at 1930, a growth of 2.5%. Margins have disappointed at 17.75%. And how are you reading the Q2 guidance at $1931 million to $1950 million?
Well, I think the revenue number is a disappointment based on our estimate, because clearly there's a 2.5% impact of the HPS acquisition this quarter. So it is slightly lower on this quarter performance front. And in terms of the guidance, it is extremely weak, because we were expecting about 0.5 to 2.5% kind of guidance for next quarter. Because in the last 2-3 years, if you see, Q2 has actually done well for them. And so this is actually a disappointment on all ends, basically, in terms of the performance and in terms of guidance going ahead.
We also have Ravi Menon of Elara Capital joining in. Ravi, come in on the guidance. It's 0.01 to 1% for the second quarter. What was your expectation, and what do you think would be the reason for such a flattish growth expected in the second quarter?
So they had, I think, spoken of some issues at their largest customer, where there is a shift happening to change the business, and they were doing some pilot programs, and we're expecting to see that come through into revenue. Maybe there is some delay there. I think that could be one of the reasons for lower guidance than what's expected. We were looking for about 1 to 3% guidance, so this is a little disappointing. This quarter's revenue is exactly in line with what we estimated, accounting for the difference in cross currency.
Okay, yes, Q1 dollar revenue growth at 2.6% is slightly better than street expectations. But, Karan, what could explain such a muted guidance? This is far lower than what the company has guided in the past for the Q2 quarter. Q2 is not so bad for Wipro traditionally. Just throw some more color on this guidance. And what should we expect the stock to do?
It is more to do with the vertical Actually, it's more to do with the vertical presence they have in terms of energy. So that is not recovered even now. And if you see, 3 quarters back, that was on a negative trajectory. It was declining Q on Q. And last quarter it has some kind of mild uptick of about 1% Q-on-Q, but again it would largely be led to the vertical presence they have in terms of technology vertical, the high tech vertical, and the energy vertical, which is really not doing well for them, and their top clients are present in these kind of concerned verticals. So that's the reason why the organic growth has actually been muted for Wipro.
Okay, constant currency revenue growth has come in at 2% for Q1, which is bang in the middle of the company's guidance of 1 to 3%. So Q1 is a mixed bag on the top line. The company has delivered a growth of 2.6%, but they've missed on margin expectations. And by the way, there is a bit of a restatement at the EBIT level as well. So 17.8% margin for Q1 will compare with 19.7% rather than 20%. But it's still a decline of 190 basis points on a quarter-on-quarter basis, but the Q2 guidance is a big miss. Rahul, stock reaction tomorrow?
I think the reaction would not be very bad given that there was not a very high expectation from the result. It has come slightly better on the top line perspective. EBIT margin, once we come to know what are the reason, the reaction would be more function of that. So I think if it's a sustainable pain, then probably we may see a max 3 to 4% cut price reaction, not much more than that.
Karan, a quick question to you. If you immediately compare Wipro's outlook on guidance versus TCS and Infosys, do you believe that the gap between the IT majors, Wipro versus TCS and Infosys of the world is now growing further and further apart?
Yes, it is actually growing further apart, because if you see last year, company like Infosys basically grew in line with industry. You saw Wipro having a dollar term growth of about 6.5–7%. So that gap is anyways high, and it's going to grow further higher from here on, because the organic growth for Wipro is going to be muted again going ahead. So if you see Wipro, they have done an acquisition which is about 3–3.5% of their revenue contribution in terms of size, whereas Infosys has not done any such acquisition, and despite that we expect 10–11% growth for Infosys. So that gap will actually converge, but at a faster pace in terms of your organic growth component for Infy versus Wipro basically.
Okay, let me just run our viewers some more details. Client mining has been an issue for another quarter. Their top client, which declined by 13% in Q4, has declined by another 5% in this quarter. I think the top 5 clients, which fell by 2% in Q4, have fallen by 4% in this quarter, and the top 10 clients have also declined by about 0.8%. So the top line, see, as you can see, the percentage contribution to the revenue has come down, which means that the top line, if you actually calculate, the top clients have seen a degrowth of about 5% this quarter on a quarter-on-quarter basis. Finance, which has not done well for the company historically, at least in the last 2 quarters, finance vertical resulted in a degrowth. This time it's bounced back with a growth of 3.5%, but energy continues to struggle. Energy, remember, contributes close to about 14–15% to Wipro's overall revenues, and that has seen a sequential decline of 2.7%. In constant currency terms, it's declined by 4.1%, which means your energy vertical has declined but for the 7th straight quarter. So finance has done well for them this time. But energy continues to remain a problem pocket, declining by 2.7%. And healthcare, on expected lines because of the acquisition that they've done, has gone up by close to about 18%. In terms of geographies, America has fired well. So America is up 4.5%. Again, it could be to do with the acquisition. Europe is up 1.7%. India and Middle East has seen a degrowth this quarter. So, those are some more internals. Attrition has gone up very sharply. So quarterly annualized attrition now stands at 17.9% versus 14.9% on a quarter-on-quarter basis. Attrition has gone up by close to about 300 basis points this quarter. Client metrics continue to remain a bit subdued. No addition to the $100 million client. the $75 million client has seen one addition, but $100 million continues to remain, but flat at 9. And I think it's been a 9 for the last 3-4 quarters at least. So they've not managed to add the largest clients that's in the $100 million bracket. So client mining is a problem. But overall, as we've said, it's the Q2 guidance. The street, what they want from Wipro is growth. And while they have delivered in Q1 on growth, they've missed out on margins. So clearly growth in Q1 has come at the expense of margins and the acquisitions that they've done. Because you remember this top line growth of 2.6% is largely on account of the acquisitions that they've done. The organic growth is not going to be significant, but they're faltering in growth in Q2. And what we also don't know is whether the Q2 guidance of 0 to 1% factors in the VTOS acquisition, because on that we don't have clarity. If it includes the VTOS acquisition, which could potentially give them 0.3, 0.4% to the top line, then the organic growth for Q2 would be even lower. But again, we don't know when VTOS would be consolidated and if it's included in the Q2 guidance.
Would you take some heart from the fact that utilization is at 69.9? Let me pose that question to Ravi. Ravi, if you're still with us.
Yeah, so I think that there is a lot of headroom in utilization, so they should be able to offset some of this margin decline, hopefully over the next few quarters.
Ravi,
they have said that they want to increase utilization over the year. So,
Ravi, you heard Rima give the breakup of the verticals as well. Energy, again, lagging behind. And that's something that management has guided for. But the fact that we're not seeing any significant pickup in energy, how much of an impact would that have in the coming quarters, especially Q2?
So we have been saying that a pickup in energy spending is necessary for Wipro to catch up with the industry average, and I think this quarter again shows that. I mean, if they hadn't had this decline in energy, they would have probably been in line with what TCS and Infosys growth rate has been. Over the last, I would say, 2-3 weeks, we've seen energy super majors, commit to major capex. So we think that this is an early sign that their cash flow is stabilized. Hopefully, this should translate into spending for IT as well over the second half of the year. So I would be, I'd watch out for the commentary about the energy vertical and some hopeful signs over there of a pipeline starting to build up. That would actually be what would make me look at this more positively. I think otherwise the results have not been great.
Karan, as far as the energy vertical is concerned, how necessary is it for Wipro to now gradually reduce their focus on energy and then shift it to healthcare, for instance, which they've already acquired, health plan services and financial services?
The problem is that a lot of their top clients are currently in the energy vertical space, and they've been not been able to basically deleverage from that front as of now. So it's been about 2-3 years. The management is clearly trying to move away from the energy vertical, but they've not been able to do that successfully. So the problem really lies there, and until this energy doesn't recover, we don't see any recovery for Wipro going ahead.
Any other numbers that we have, Rima?
No, not really. Just working with the same numbers. What's good this time is that the core vertical of finance has done well, so that's up close to about 3.5%. And secondly, America has done well at 4.5%, though that could be acquisition linked. Ravi, take us through what you expect the stock to do. The reason we ask is that I think for the stock to go up, you would need growth. And going by the Q2 guidance, there is no growth. And even in the prior quarter, when the company came out with the buyback, it was a tender buyback at 625, but the stock never went to those levels. Now, what support does the Wipro stock have, and how do you foresee the trend for the stock?
I don't expect a really big negative move tomorrow, because people knew about the issues in energy, and I think holders in the stock will take heart in the fact that outside of energy, other verticals have done decent. I haven't actually seen all the numbers, but I assume that you've spoken about BFSI. I assume that other verticals would also have done well. People will watch out for retail, and healthcare, excluding HPS, how it is done. if all that is pretty okay, I think we can expect maybe just a 1.5–2% kind of downtick tomorrow.
Yes, anyway, the stock has fallen close to about 5–6% since TCS Infy came out with the numbers. So I think the street was expecting not a great set of earnings from Wipro.
Sarabjit, comment on that, as Rima was saying, not many analysts were expecting any blockbuster performance. So perhaps tomorrow there may be no major issues with respect to downsides. But what's your outlook in the near term at the back of the guidance?
The guidance is muted, and given that they are focused on energy and dependent on energy very well, and that their as client mining is not greatly happening in other part of the business, I guess stock, as you rightly said, it's already beaten down significantly. So I don't see. I expect them to say in the commentary that possibly because of energy dependence, probably second half to be better. But then still, I think the performance is still not living up to the mark. So probably I think downsides are limited, not more than 3–4%, I guess. But
Okay.
I think everybody in Wipro is watching for signs of it coming back to health. And right now, the only savior seems to be energy, because client mining and other domains are not happening that greatly, or an acquisition which is big enough to take care of the growth. So I guess these are the only two triggers left in the company.
Okay, remember the management will be talking at 5 p.m. addressing a media press conference in Bengaluru. Let's quickly get closing comments in. Then Ravi, coming to you, what would you expect? What are the key takeaways that you need to hear from the management before you decide on the outlook?
I think the top client, that will be key. Secondly, attrition, what's their outlook going forward? And third would be commentary about energy. What's the pipeline like, and are they seeing it bottoming out?
Okay, yes, we'll track these three things from the management. But Ravi, your expectation on the margin trajectory, it's already dropped to 17.75%. Q2 will see the additional hit on account of wage hike. Would you lower your FY17 margin expectations for Wipro? And if yes, what could it roughly stand at now?
So I had been estimating, for the IT services about 20%. So I think about 50 to 70 basis points lower, possibly, compared to that.
All right, Ravi Menon, Rahul Jain, Karan and Sarabjit, thank you so much for joining in with that detailed discussion on the first cut analysis of Wipro's earnings. But remember, the management will be addressing that press conference at 5 p.m. And we'll also get